How's it going, everyone, and welcome to the sweep. We're going to go ahead and get started on our three-part, well, it may be 3 or 4 parts. We'll figure that out at the end here, likely four parts. But this is the third part of what is day trading. So this is day trading for beginners, right? We started off with some really simple things, and now we're kind of evolving into some other facets of day trading. But one thing that is really important when day trading is learning how to use MetaTrader 4. So we're going to cover that today. And I'm just going to let this disclosure run through for you. Feel free to pause the screen and read that if you'd like. And also remember to follow us on YouTube by just clicking the subscribe button. That way, anytime we post any kind of content, you're apprised of it and you're able to watch that. You can also follow us on Facebook at /DayTradeSmart, Instagram DayTradeSmart1, and then of course YouTube.com/theprovingground. And if you have any questions beyond that, of course you can always email us info@daytradesmart.com. All right, guys, let's go ahead and get into it. So we're going to talk about downloading using MetaTrader 4. So the first step, of course, is going to be to download for desktop and mobile. You can do it for both. For desktop and mobile, I would recommend doing it for desktop first, and then get your credentials for your demo account, and then log into the mobile. You can download them simultaneously, but you'll want to make sure that you got set up with something on your desktop so you can have some login credentials. So when you download it on mobile, you can use those credentials to log in. Now, we want to look at setup and aesthetics. Navigation, how to navigate, buy, sell, so on and so forth, where everything is, what buttons you're supposed to press, how to look at your active accounts and your historical information, and so on and so forth. So we'll go over all of that. Of course, placing trades, setting your stop loss and your targets. So first thing, we want to figure out how to count pips. Before we do that, let's go ahead and look at the download process. So what you're going to do first is you're going to pick a broker, whatever broker that might be, and you're going to use that broker to then download MetaTrader 4. Now, MetaTrader 4 for most Forex brokers is common, right? Over 90% of Forex brokers use MetaTrader 4. If you're using a broker that has their own platform, awesome, you can use that. The form, how you move around and stuff is going to be relatively the same. However, if you're using MetaTrader 4, then this will be specific to that. Now, again, we're going to focus on Forex. Even though we can trade just about anything, we're going to focus on Forex because this is where we like for people to start for a number of reasons. And so now I do want to preface before I go to this site that we are not an introducing broker, so we don't make recommendations for brokers. And when we go to this particular broker, this is just one that we use when we fund our corporate accounts, and I'm just going to use it as an example, but I do want to preface by saying we're not making any recommendations, but just kind of the process for doing that. So let's go ahead and go to coinex.com, and in Coinex, we would just go to open an account. Now, I already have an account, so when you open an account, it's just going to want you to fill out some information, but I'll go ahead and sign in. And once you're in, I'll kind of walk you through the process here. Let me bring that up. Okay. So once you're in, it'll take you to kind of a dashboard. And what you're going to want to do first is set up a demo account. You're not going to want to go live until you learn how to trade, obviously. So go into demo account and then create account with MetaTrader 4. So you'll want to use MetaTrader 4, press create account, and then leverage. Let's start with 200 to 1. I'll explain why later on, but we'll say 200 times. And then, of course, USD. It used to have a selection where you can allocate what size demo account you want. It seems they've updated it and taken that option out, and I think it just automatically sets you up with a $1,000 account. So I'm going to make this demo account, and you guys will have access to it because it's going to immediately show me credentials, which is of no consequence to me. So you can see we've got our trading ID and our password. And so right here, download MT4 for desktop. If you press that button, it'll automatically start downloading MetaTrader 4 with the Coinex broker if you're using this. Obviously, you can use whatever broker you'd like. Once it's downloaded, then it'll bring up a MetaTrader 4, and it'll kind of look like this. I'm going to try to replicate it. Actually, I think I've got one where I've already set one up. It doesn't want me to. It doesn't let me restructure it, but let's see if this one logs in. This is generally what it looks like. So the first thing, this is just through MetaTrader 4, not through any specific broker. And so first thing you want to do is, it'll probably look like this or similar to this. So the first thing you're going to want to do is you're going to take those credentials, and it'll have something that looks like this pop up, and it's just going to say, which servers you can choose from. So where we're using CoinEx for this example, if I look up brokers for CoinEx, it'll show CoinEx, and then it'll show all the servers for CoinEx, and one of them will be demo, CoinEx demo. And then once you use these credentials to log in there, the credentials that we were just using here, then it will kind of give you, make it a little chime. The lower right-hand corner will show connected as long as you put in the credentials correctly. And then it'll give you these 4 charts initially. Sometimes different currency pairs, but generally about 4 charts. Let's see, what is this asking me to do? No, I don't want to. Okay. And so what I would recommend is setting it up a certain way so that it's more legible. So I'm going to expand this. I'm going to get rid of all this fluff, and I'm going to expand the candlesticks themselves. And then once I'm done with that, then what I'm going to do is I'm going to right-click on anywhere on this chart. Let me get to the beginning first. Okay, there we go. So I'm going to right-click anywhere on this chart, and then I'm going to go to Properties. And within Properties, let's go to Colors. Normally it defaults and takes you right to Colors. Now for bar up, I'm going to leave that green. Bar down, I'm going to make that red. And bull candle, which is green, which is up, I'm going to make that green. And then bear candle, which is down, I'm going to make that red. And then all the way down here, ask price line, I'm going to make that pink or something different than any other line that I use. And then I'm going to go to common. And in common, I'm just going to make sure that, let's see, or show, sorry. In show, I'm going to get rid of the grid. And then I want to show the ask line, the ask price line. So I'm going to select that, and then I'm going to press OK. Now once that's done, you can see red candles go down, green candles go up, and that just makes a lot more sense. In one of our other sessions within this series, we talked about candlesticks and kind of the anatomy of candlesticks. So if you haven't seen that yet, go ahead and go back to that. But this looks a lot more legible, a lot more clean. It doesn't look as busy. And then the next thing I'm going to do is, now that I've got all that set up, I want to save that as a template. And so I'm going to go to, let's see, where is it? Oh, in the other one, it's a little different. In the broker that I use, the settings are already preset. But this will be a good experience for both of us. Let's see, where are the templates? Templates right here. So under charts, go to templates, and then save template. And then I'm just going to name it Hiram. Just going to name it after that. I would recommend you do the same. That way it's easy to find. And then press save. Now if I go to these other currency pairs and I want to make it look the same way, I don't have to go through that whole process of right-clicking and changing all the stuff. I can just go into my templates and then select Hiram, and it'll change it, right? And then, so I'll do the rest. I'll do that for the rest of these here, and I'll tell you why I'm setting up these specific ones here in a moment. So let me just change the rest of these. Template, Hiram, and then I've got Euro USD, USD Swiss franc, Great Britain pound versus US dollar, and US dollar versus Japanese yen. And then I want to add a few more. So if I right-click here and I go to symbols, then it'll bring up some symbols for me. And I want Forex symbols, and I want to use, I'm going to use AUD CAD, which is Australian dollar versus Canadian dollar, and I'm going to show that. So I'm going to click it and then press show symbol, and then I also want the GBP JPY, which I don't have on here, GBP JPY. Click on that and show symbol, and then I'm going to press OK. Now I've got them over here. So if I right click on one of them and go to chart window, then it'll open it back up, and then of course I know what to do from there. Go to chart, template, select my name, same thing here, chart window, and then go to chart, template, select my name. Good, now I've got them all there. The other thing I want to do is I want to see the spread, and we'll kind of talk about spread here in just a moment. So I'm going to right click here where it says symbol, bid, and ask. So I'm going to right click, and then I'm going to select spread. It's not there. Usually that's exactly where it is. Okay, well maybe some of them don't have it. Okay, so normally, here we go. So if I go to columns and I select spread, it'll add it. Okay, so now it's there, and you can see these are kind of bunched up, so I'm just going to stretch that out a little bit so I can see the full numbers and the spread. The spread is the difference between the bid and the ask price, and I'll explain how that, why that's important here in just a moment. So now I've got it looking the way I want. I've got the currency pairs I want. So why these specific currency pairs? Well, because historically they have enough volume and liquidity that goes through them that will support larger trades. So if you Google like 7 or 10 major pairs, you'll find that these are, and there are different lists, by the way, but you'll find these are most consistent within those 7 to 10 major pairs that are listed. Now, even though they might have, a currency pair may have big currencies or big countries like Great Britain pound and Australian dollar, right? That doesn't mean it's a major pair, right? So these historically are not subject to flash crashes, although it could happen. It's not likely to happen in these where, some huge mogul or a huge, private equities firm or a hedge fund can put in, a huge trade and really cause for the market to drop or go up or whatever in whatever direction aggressively. Where if they were kind of some offhanded currency pairs, that is possible, right? And that's been done before in the past. But these have so much money exchanging hands that it would take quite a bit to be able to do that to these particular currency pairs. So that's why we use them. Also, first in, first out, and slippage rules will affect your ability to get in and out of trades effectively on some of the offhanded type account, or rather currency pairs. Now, in a demo account, you wouldn't be able to tell the difference. You press the buy button and it puts you in right where you want to be in. You set your stop loss and take profit and it takes you out right where you want to be taken out. But in the live market, there are these rules like first in, first out and slippage that can cause for you to not fill your trade order where you want it to be filled. And sometimes you'll see folks that will kind of try to mitigate that by incrementalizing their lot size, so the amount of lots they put in per trade. So instead of putting in, say, a 50 lot or a 100 lot, right? So this would be 100.00, right? 100 lot, which is $100 per micro pip or $1,000 per regular pip. So that's, literally just small increments of movement is anywhere from $100 to $1,000. If you're looking at micro pips, those can fluctuate pretty aggressively, literally within, 10 micro pips, second by second. So if that's $100 per micro pip, 10 micro pips movement would be like $1,000, second by second. Obviously, you would want an account that could support that. But versus putting in, say, 100 lots, they would spread it out and maybe put in 5 20-lot trades or, 10 lot trades. So 10.00 and then just press the buy button 10 times or the sell button 10 times, so that if there is any kind of slippage, then they're still getting their fill on most of their trades and not getting any of that slippage on all of them. And we're not going to go into slippage too much today because it's a little more involved, and we'll cover it another time when we're talking about money management. and how to backtest and so on and so forth. But for now, let's go ahead and just move on with our lesson for MetaTrader 4, right? Okay. So we've got the currency pairs that we want, and there's a specific reason why we want those currency pairs. We've got the charts looking like we want to. If we press the sell or buy button, it'll give us this one-click trading disclaimer. And this disclaimer just wants you to accept the terms of one-click trading, meaning when you press that sell or buy button, you're going to automatically be put into the market. And they'll ask for this even if it is a demo account, because once you go to a live account and you log in, one-click trading will still be activated. So accept, press OK. Now, if I pressed the sell or the buy button while the market is open, then it would automatically put me into a trade. Now, right now it's not going to because the market is not currently open, right? So it won't allow me to put in a trade, and it won't open until Sunday at 5 o'clock Eastern, 5 p.m. Eastern, and then on Sunday at 5 p.m. Eastern, it will from Sunday at 5 p.m. Eastern, it will remain open until Friday, which is today. That's why we're doing the sweep right now at 5 p.m. Eastern, and so I'm pulling up a video here. Give me 1 second. Okay. So because I can't put in a trade right now because it's after 5 p.m. Eastern, it's 3:16 my time, which is 5:16 Eastern. I'm just going to show you a video, and this video is on our YouTube channel, youtube.com/The Proving Ground, and it's just called MT4 tutorial, right, or MetaTrader 4 tutorial. So you can go and watch this as well. Now, essentially, when we press that buy or sell button, it will put us in a trade. And you'll notice a couple of things when we get into that trade. So I'm going to fast forward here. Okay. So you can see I've entered into, I'm going to maximize this. I've entered into a sell trade, right? So you can see that currently when I push the button, you can see this green line over here at the bottom. So I've entered into a sell trade. And so down here you can see your order number. You can see the time that you entered that trade. You can see the type, in this case was a sell, so I wanted the market to go down. The size, 3.0 lots, which is $3 per micro pip or $30 per regular pip. And then the currency pair, Euro USD. And then this number is going to be most important. This is the price that I entered. So that's 1.08254, right? And then with that number, I would set my stop loss and my take profit, which are right here. S/L stop loss, T/P is for take profit. Now, the way I would do that is there's a number of ways to do that. And let's get to where we can look at that. Okay, so I'm just going to fast forward here. And let's see. Okay. All right, let's see. Okay. So what we're going to do is we would right click on that order line, anywhere in that order line. And when we right click, it'll give us an option to modify or delete order. And you'll notice I'll select that here in the video. So go up to modify or delete order. Now what this does is it'll bring up another window pane, and it will allow for me to put in my stop loss and my take profit, right? Now, my take profit is where I want the market to go. So I'm selling, so I want it to go down. Let me change colors of this. I want it to go down from that line, right? And so that's where I want it to go. So I'm going to say when you get to this level, take profit, whatever that price is, take me out of the market and give me my profit, right? Now, if you don't go to that level and you go against me, I'm okay with you going against me until you get to this level, my stop loss. And so I tell the system, at this level, take me out, and I'll lose the trade, but I don't want to lose any more than that, right? And that's based on your money management, right? So after you backtest, you figure out what your take profit should be for that setup for the specific times that you trade in the specific currency pair you trade, right? And then what your stop loss should be, and those should equal your risk to reward ratio, which is your stop loss to take profit ratio, should be something that with your win percentage equals dollars, right? And we talked about that last time as well, like 70%, 2 to 1 or better. 60%, you're going to have to start getting into the 1 to 1s. 50%, you're going to have to start getting into 1 to 2 ratios. In other words, if I have a stop loss that is 10 pips away, then and I have a 2 to 1 ratio, then my take profit would have to be 5 pips. 5 pips from my entry, and my stop loss 10 pips from my entry, and no more than that, right? So I can't go more than 10 pips. I can, in fact, I could go higher than 5 pips with a 10 pip stop loss at, say, 70%, but I can't go more than 10 pips with a stop loss with a 5 pip take profit, right? So that's a 2 to 1 ratio if I had a 10 pip stop loss and a 5 pip take profit, right? Because my stop loss is twice the amount of my take profit. And if I won that 70% of the time, then I would be profitable, 70% or better, right? Okay, so here is where we put in those parameters. And there's a number of ways to do this, but let's show this one first. So right here, we would look at our entry, so 1.08254. And then if we are adding, say, or this is a sell, so we would subtract for our take profit because we want it to go down, right? And so let's, so here we go, 108. And I want to show you this, and then I'll kind of break it down for you guys, okay? So 108.254, and I'm just going to look at those middle numbers right there, right? 825. And then I'm going to subtract from 825 for my take profit, and I'm going to add 8 from 825 for my stop loss, okay? So we'll come back to this video here in a moment, and I want to break this down for you guys first so you can see how to count pips and the like, okay? So first thing we're going to do is look at pips, right? How to count our pips. That's the first thing we want to do, learn how to count our pips. So let's look at the anatomy of what does pip mean? First of all, percentage and point. We talked about this already, right? This is how price is quoted in Forex. The number to the far right is a micro pip, and that moves up or down in increments of 1. So 4 to 5 to 6, 7, or 4 to 3 to 2 to 1, so on and so forth, right? So this would be 0.4 pips or 4 micro pips because that number is a 4, right? Okay, so if this is our number, 1.19564, let's just focus on these 3 middle numbers. So the number to the left of the last number, and that one, right? So 3 numbers to the left of the last number, because this is the pip value, right? But to make it simple, if I just looked at the number 6 and I needed to add 5 to that, obviously you would just carry it over. So if I added 5, then 6 plus 5 would be 11. So I'd put a 1 right there, and then this 5 would become a 6, right? Now, if this was a 9, for example, and this is the 6, and I'm adding 5 to it, then I would make this a 1. This would become a 0, and then it would change this number, right? And if that number changed, then that number would change. But generally, you're going to stay within these 3 numbers when you're adding. So to make it simple, to make it easy, and be able to follow along with it, I would recommend just looking at these 3 numbers, 956. So 1.19564. Okay. So let's look at just those 3 numbers, 956. Okay. And if we're buying, let's say we're buying, so we want the market to go up if we're buying, right? Now, this is a risk to reward. Now, when we talk about risk to reward, we talked about this before. Risk is the first number that's listed. Reward is the second number that's listed. So I'm risking 10 pips, which will be my stop loss, to get 13 pips reward, which would be my take profit. So this first number is always going to be our stop loss. This second number is going to be our take profit. Okay, always. So if I wanted to add 13 to 956, right? So I would just plus 13 to 956, and that would be my take profit, okay? And then my stop loss, I would minus 10 from 956, and that would make my stop loss if I'm buying, right? So it would be like this. So plus 13 would be 969, right? 956 plus 13 is 969. And then I would just carry up the 1.1 and carry up the 4. That's it. Now I have my full number. So when I put in that take profit, I would put in 1.19694, right? And that would be 13 pips. So this number moved 13 times, right? This second to last number. And then my stop loss, I would minus 10 pips. So 956 minus 10 pips is 946, right? And then I would carry down the 1.1 and carry down the 4. So then my stop loss would be 1.19464. That's how I would do it for a buy, right? Now this might get a little confusing here in a moment, so hold on. And of course, if you have questions, you can chat those in. The chat should be working while we are live, so feel free to chat in any questions, and we'll make sure to get them addressed. Or just say hello, right? All right, so now let's look at a sell, right? So if we're selling, we want the market to go down. So 956, we want our take profit, right, to be minus from 956. So we want 13, our take profit, to be minus from 956, right? And our stop loss, we want 10 to be added to 956 for our stop loss, because we want the market to go down. And we want it to go down by 13 pips before it goes up by 10 pips. Okay? So that would be 956, and then we would subtract 13 for our take profit, where here we added 13 for our take profit because that was a buy, right? 956 minus 13 is 943. And then we just carry down the 1.1 and carry down the 4, and we have 1.19434. Okay? And then we want to add 10 pips for our stop loss, right? So 956 plus 10 is 966. We don't want it to go there. We don't want it to go up, right? So then we just, when we're putting in that whole number, it's 1.1966 and then carry the 4, right? So 1.19664 would be our stop loss. So when we're putting that information in here, our take profit would then be for a buy, right? Our take profit would be 1.19694. So right here, it would be that number, right? 1.19654, whatever that was, right? And then because if we were buying, right? And then our stop loss, we would be 1.19464. So then we would put that number in right here, 1.19464, right? And then we would hit this modify button, and I'll show you that here in a moment. I'm not sure what I set for take profit and stop loss on this one. And this one is obviously a sell. So if we're going to sell, then we want our take profit to be below our entry. We want our take profit, we want it to go down, so we want our take profit to be below wherever we entered. So it looks like we're going for a 10 pip right there. So 825 would be 815, and then just carry down those other numbers, 1.0, and then 825 becomes 815, and then carry down the 4. So that's our take profit, 1.08154, like that number right there. And then hit that modify button. And once we hit that modify button, then we'll be able to see our take profit right there in red. And if we hover over it, it'll show, well, right there, just to clarify, when you hover over it, it says pips 100. That means 100 micro pips. Okay, even though it says pips, I don't know why MetaTrader 4 does that, but even though it says pips, that's 100 micro pips. So that's 10 regular pips, right? So you just divide it by 10, right? So 10 regular pips. So if you're doing this and practicing, then you can check that to make sure that you did it correctly. And then we do our stop loss. Excuse me. And our stop loss would just be, whatever our stop loss is going to be, would be added to this 1.08254, because we are buying. Oh, we got out of that trade. Okay, so let's see, probably got to put in another one here. So let's wait till I get to it. Okay, so here's another cell, and then our entry is 1.08116, and we are going to subtract, right, from 811, those three middle numbers like we talked about, right? So if we subtracted, if we do 10 pips again, or whatever we're going to do, I don't remember what I did in this video, and you can use a calculator, right? 811 minus 20, so 791, right? If we were going to set it for 791, or for 20 pips, then 811 minus 20 would be 791, and then just carry down the 6 and the 1.0, right? And now we have our full number, 1.07916, and we'd put that in our take profit. So right there, 1.07916, and then we would hit that modify button. Okay, there we go. And if we hover over it, we should see 220, which is 20 pips, right? 200 micro pips. Good. And then we want to do our stop loss, right? And we could do them simultaneously, but now we'll put in a stop loss, right? And we'll do the same thing. That line right there, we're just going to right click on that line where our order is down here at the bottom, right? And let's see, let's get to it. Okay, so we modify our delete order. And now you can see right here, we already have our take profit set. So we don't want to mess with anything here. And by the way, if we push this blue button, it'll just copy whatever number is in there down to here. So, you know, if you already have a number set right there, don't press that button, that blue button right there. Matter of fact, just never press it. It'll just jam you up. So now we want our stop loss in a cell because we want the market to go down in a cell. So our stop loss would be above us. So we're going to add to 811, right? Those three middle numbers, 811. We're going to add whatever our stop loss is, right? So let's see what we add for our stop loss. Okay. Let's get to it. Okay. So 811, and then we add 20. So we just did 20 in either direction. So that's 831, right? So 811 plus 20 is 831. So that's 831, and then just carry up the 6, and then the 1.0, right? So 1.08316. And we'll put that in the stop loss area. We'll type it right there, right? 1.08316, and then hit that modify button. And now we have a line above us. That's our stop loss, negative 200, which is 200 micro pips, 20 regular pips. And that's how we add our stop loss and take profit manually. Now, there's another way to do it where we can just grab the line, right? And I think we're going to look at a buy. So the buy is just backwards, right? With the buy, we would add for our take profit from our entry. So 1.08035, we would just add for our take profit, right? But it's still going to go in that same area when we pull up this right here. Our take profit is always going to go here. If we're buying, our take profit is going to be, the number is going to be added to our price, right? So if we're going up by 20 pips, then we're going to add it to our entry. So 803, those three middle numbers, plus 20 is 823. So 1.08235, we would type that number there, right? And then for our stop loss, we would go in and add it there, and we would subtract from our entry. So 1.08035 minus 20, and that would be 1.07, what is that, 78, or what is that, 83, what did I do there? So 803, oh yeah, 783, yeah. So 783, so 803 minus 20 is 783. And then we would put that in on the stop loss area, right? So 1.07835. And again, to make it simple, all we're doing is modifying those three middle numbers. Now, sometimes the numbers are different, like if we looked at, or the format of them are different, right? So here on the euro versus US dollar, it is kind of in this format. It's 1 point, and the price that it ended at today is 17933. So 1.17933, right? So the 1 point. And then if we look at something like the GBP JPY, the format is different, right? It's like 151. So this is where it ended, 151.262. So the point is in a different place, right? But we can still use those three middle numbers, 126. So if we were adding 20 to that for a buy, that would be 146, right? 126 plus 20 is 146. And if we were subtracting 20 from that, then that would be 1.06, right? And then I would just bring those other numbers up. So 151.462, 151.062, right? So just using those three middle numbers. So sometimes the format is different, but you'd still use the three numbers to the left of the last number, right? And that's going to help you add and subtract. By the way, for some people, it's really, it takes some practice, right? Just to figure that out and get acclimated with it. So don't be afraid to use a calculator or write it out. That's what helped me when I was first starting, is I would just write out the number, and then I would underline the numbers that I was going to manipulate, and then I would, add and subtract. And I would just remind myself, if I'm buying, then I want my take profit to be above my entry. If I'm selling, I want my take profit to be below my entry, right? So just remember, wherever your take profit is, that's where you want the market to go. Wherever your stop loss is, that's where you don't want it to go, but you also want to protect your trade. So if it does go there, it takes you out, and you get a loss on that trade versus a win, right? But you've planned for that. You're going to have losers. It's inevitable. And so when we back test, we plan to know, okay, what our stop loss and take profit will be and what we're expected to win in terms of our win percentage, and it's supposed to equal profit. Otherwise, you didn't do it right? So again, 70% with a 2-to-1 or better, or 60% with a 1-to-1 or better, or so on and so forth. Right? It's just simple math. Okay. So let's look at balance, equity, and margin. So first, let's talk about balance. So your starting balance prior to entering a trade. When a trade is open, your balance will not change until your trade hits a stop loss, take profit, margin call, or you manually close the trade. Okay, so those parameters that we drew in, you'll notice that our balance didn't change after we entered that trade. Our balance remained the same. Okay, so right here, let's go back to when we entered that first trade. Let's go back to before we entered it, and I'll kind of show you what I mean here. So right here, the balance on this is 49,952.35, right? Or 48,952.35. So 48,952.35. Okay. Now, once I press that button, that buy or sell button, I think I pushed a sell button. Notice that my balance did not change. 48,952.35. But my equity did change. Okay, so and we'll break all these down. So equity is the difference between your balance and plus or minus any active trades plus swaps and commission fees. So we're going to talk about all that. And then margin, the amount of money your broker will reserve, so like collateral, for open trades based on lot size. Free margin is the amount remaining before margin call, after your equity plus or minus any active trades plus swaps, commissions, and margin requirements for that pair are calculated. So let's break that down. Let's look at that. Okay. So our equity is less than our balance. It's 48,919, right? So it's about $33 difference, right? And that is because as soon as we entered that trade, you can see that the price that we entered is 1.08254, and it is at 1.08263, which is higher than where we entered, right, by almost a pip. And at $30 a pip, that's gonna equate to, so at where we are right there, it's about $27 negative, right? If we went just another 1 micro pip up, then it would be $30 negative on that number right there. And you'll notice that this number down here is $33, right? So why is this number down here bigger than this number right here? Well, that's because this number down here where it says $33 is taking into account those other things that we had mentioned. So the difference in our price right now, we're negative just under 1 pip, right? Almost a pip, and that equals $27. And then our commission, which is $6. So it's 27 plus 6 is 33, right? And the commission it will vary based on your broker. Now, we'll talk another time about our recommendations for brokers, or not broker recommendations, but what you should look for when looking for a broker. Not a specific recommendation for a broker, but what to look for when you're choosing a broker. But one thing that we'll cover right now is just the balance between commission and spread. So we want our spread to be really tight. In other words, the difference between bid and ask. So if, let's just say the spread on this currency pair, Euro USD, is 7 micro pips, that means that if I enter this trade at 1.08254, right, that's where so I'm getting about 7 micro pips away from, so in this case, because it's a sell, it would be 7 micro pips higher than where the market currently is. And that's how the broker gets paid. They kind of piggyback on your trade. So if it wins, then they get that difference in whatever that number is, right? The other way they make money is with commission. And so they charge you, for this broker, it's $2 per 1 lot. So if I put in a 1.0 lot trade, it would cost me $2. You can see I have a 3 lot trade, so it cost me $6. If it was a 0.01 lot trade, right, it would be like 2 cents. If it was a 0.1 trade, it would be 20 cents. And because it's a 1.0 trade, it would be $2. Or 3.0 would be $6. Okay, so that's kind of how that breaks down. So you want a balance of those. You don't want the commission to be high, and generally if there's no spread, your commission will be really high, right? So I've seen brokers that have like a $7 commission per 1 lot and, you know, 0 spread, or zero to very little spread, right? Other brokers that have, like, you know, a smaller commission, let's say $1, right, per 1 lot, and like a 1 pips, 1 whole pip, so 10 micro pips, 1 whole pip spread, right? So you want kind of a balance of the two, okay? This broker is micro spreads and small commission. So it's a good balance, right? And that's what you want to find. You want to find something that has a good balance. Okay. And it's not the only one, right? There are other brokers that are better or the same, or, you know, there are other factors, not just that one, but there are other factors that go into picking a good broker. Okay. So let's go back to our slide here. Balance, equity, and margin, right? So let's look at those really quickly. In the example that we're looking at here, we have equity that is $33 less than our balance. So our balance hasn't moved, and our balance won't move until we hit our stop loss, which we set later, right? Our stop loss. And you'll notice once this trade, and I think this trade after we set the take profit, it actually fills. So we'll look at that here once we've got our take profit in. And you'll see kind of what that looks like. So let's go to that. that in. Okay, there's our take profit. So right now you can see as we were doing that, the market started moving in our favor, right? And now it's at $114 profit, right? Net profit. Right there it says 120, and that's 120 minus the $6 commission is $114. Then that's what we get to have. That's take home, right? That's net. Gross is 120. Okay, so at this level where we're $114 positive, we can see that our equity is now $114 greater than our balance, right? So it's fluctuating until we hit our take profit. And when we hit our take profit, then whatever we win right here will then be added to our balance. Now, if we lose, then that would be added to our balance. So if it went the other direction, hit the stop loss, then after the trade closes, then the balance is affected. But until that trade is closed by either pressing this little X over here on the right and closing the trade manually at whatever. So if I had hit that X right then we would have won $114, and that would have been added to the balance, right? Now, if I just let it play out to hit that take profit, then whatever it equals at that take profit, which in this case would be $300, then that $300 then would be added to our balance, right? And so let's go forward on this and see what that looks like. But before we do that, let's look at some other things now that we have an active trade open here. Our equity, of course, is just the difference between our open positions, our commission, all that added up, either plus or minus difference than our balance, right? Now our margin, you can see right there, our margin is 1,623.81. That means that if my equity reaches 1,623.81, I would get taken out of this trade after having lost all that money. That's a lot of money, right? But I would have to lose all that money so that all I had left in my equity was 1,623.81. And if I did, then I would get taken out automatically by the broker. It's called margin call. You never want that to happen. If you've ever gotten margin called, you've done everything exactly wrong. You could lose an account, you could lose money, all that stuff, and that stuff happens, but you should never get margin called. Never, ever, ever. If you are, you're doing something way wrong, way wrong. That is like, think about that, guys. And we'll talk about what causes that, but think about that. There's 49,000 in here in equity, and we would have to lose 47,400 and some change, right? 40 in one trade, in this one trade, in order for us to get automatically removed from that trade and only be left with that amount. Okay, that's crazy. That you're doing something way wrong. If this is $30 a pip, right? $30 a pip. Think about that. $30 per pip. Okay. If we went 10 pips, that's 300. If we went 100 pips, that's 3,000. If we went 1,000 pips, that's 30,000. Okay. So we'd have to go negative over 1,000 pips. Over 1,000 pips, which isn't going to happen overnight. That could take months. Months, right? Let's just look at the last time we moved 1,000 pips in one direction, and since we're looking at the Euro USD on that one, let's look at this one. That's just 30,000. We'd have to actually go more than that, right? Let's go clean chart, and let's tighten this up, and let's measure from here. This is November 3rd of 2020 to there is 747 pips over 63 days. So that's not it. Let's find something bigger. What about from here? So right there is about 1,000 pips. That's 1,006 pips. And that took 164 days for the market to move 1,006 pips in one direction. That means that you ignored getting out of that trade for 164. In this example, you would have ignored getting out of that trade for 164 days and just going further, worse and worse. And that happens to traders, and they do that because they don't know any better, right? That's the idea is to get you to a place where you do know better and you don't do dumb stuff like that, right? Because that's dumb, and you don't want to be dumb, right? So don't do dumb stuff, right? But it's not dumb if you don't know the difference. It's just you just didn't know, right? It's ignorance, right? You didn't know any better. It's like a child throwing the middle finger, right? They didn't, an infant, they didn't know they're flipping the bird. So, but the idea is to know that it's bad or wrong and all the things that you shouldn't be doing, so that you can do the things that you should be doing, right? And be profitable in your trading. Okay, so that is your margin. That's what that number represents. Your free margin is the difference between your margin and your equity, right? Which in this case, 47,442.54. That's how much free margin you have. So you'd have to lose $47,442.54 from this point in order to get margin called, right? And this number will fluctuate as the market moves, right? As it moves more in your favor, then this number right here will grow. As it moves less in your favor, in this example, because we're selling, then this number will shrink because it's closer that it gets to that number, right? And then here's your margin level percentage, which is 3,021.68%. Okay, and those numbers are important to understand. After a while, you're not concerned with these numbers right here, because you're not even getting close to them, and you know exactly what to do to stay away from them, stay away from these becoming a factor, right? And part of that is how you start picking the correct broker, right? Because this number is based on your leverage and whatever the margin requirement is per currency pair, and they're different. Okay, one currency may require, let's say, $650 per one lot in collateral, right? So in other words, the broker's never going to let you get to absolute zero. You're never going to be able to bring your account to zero or negative, right? It'll always stop you before that. And in this case, it would stop you with only $1,620 some remaining before you got margin called, and that's all you would have left. So you would have lost all that dough, right? So let's say Euro US at 201 is probably going to be around $650, right? Where GBP/JPY might be like 110% margin that's required. So it may be like, 600 or 700 and $10 or something, right? Other currency pairs may require more, right, or less. Generally, it's going to be around that 650, so 100%. It's probably not going to be less than 100%. So I take that back. But that's kind of it doesn't mean you've lost that money. Once the trade closes, you get that collateral gets removed and it goes back into your account. It never actually gets removed from your account, but it's just counted towards this margin, free margin, margin percentage level numbers. So you're not losing that, right? It's like just that collateral, right? Once the trade is closed, then the collateral is no longer necessary, and you get that back, right? It returns to your free margin. So let's look at where we find that information, right? Where would we look at that information? So for the Euro USD, for this broker, which just happens to be MetaTrader 4, it's not I don't think it's associated with any specific broker. If I right click on it over here and I go to specifications, then I can look at all the specifications for that currency pair, and I can see for margin. Let's go down to that. So market, buy, sell, trade, full access. Let's see, max volume. So this one would only allow me for 500 lot size. Volume steps, 0.01. Swaps long. I'll explain swaps in a moment. And is it going to give me, I guess because it's not associated with a broker, it may not give me the margin requirement. So let me pull up the other one that we were looking at. Okay, let's look at this one. So this one, if I right click right there and go to specifications, and then we go down to margin percentage right there, 100%, right? So that's about $650 per one lot. So 1.00 lot, I would need about 650 bucks if I'm using a 200 to 1. Okay, so right here, let's look at GBPJPY specifications, margin percentage, 166.7%. So that's going to take up more free margin, right? And here's why that's important, guys. And I'm not going to cover this in depth right now because it's really in depth, but I do want to talk about it really quickly. If I have, let's say, one trade on the euro, let's just say just euro USD, right? Euro versus US dollar. And I put in a buy trade. So now I'm dead even, right? Minus commission and swaps and stuff. I'm dead even, right? I just put in the trade. My 10,000, my free margin, which is the same as my equity, the same as my balance right now because I don't have any open trades, right? Well, if I put in one trade at 1.0 lot size, then my free margin, my free margin would be $650 less than 10,000, right? So it would be $9,350, right? Which is $650 less than 10,000. So this is, I would have to lose $9,350 to get margin called, okay? But then I see another currency pair, or let's just say the same currency pair with the setup, just so we can use the same number, 650, right? But I see the same currency pair and I put in another buy, okay? Now let's say in the current currency pair, I'm a little down. Let's say I'm down on a one lot, I'm down 10 pips, right? So now I'm negative 93.50 minus 100, and minus my commission, which would be $2, right? No big deal there. $2. Okay. And then I put in another buy. Okay. Well, now my free margin is down another 650, right? So now I don't have 9,350 in free margin. I have 650 less than that, right? Which would be like 9,700 if I'm not mistaken, or yeah, 9,700. So no, 8,700, 8,700, right? So, and then minus 100, and then now minus another $2, right? So 87, 9,350. Yeah. Okay. So 650 would be 87 minus 100, so it'd be 86, and it would be so minus 4, so it'd be 85.96, $8,596, right? Now that's if I just put in two buys in the same. So after all that, right, 8,596. Now, if let's say I didn't know any different, right, because it's ignorance, right? You don't know any different. You're just a baby throwing the bird. You put it in the GBPJPY, which we saw was actually 166%, right? So it's not 650 anymore. Now it's more like 1,000, over $1,000, right? So from here, let's just say I put in another trade on the GBPJPY, right? And in that process, this one's maybe come up, and this one's maybe only, you know, let's just say it's $20, or it's you know, it's $90 negative, and our other trade is $10 positive. So we're only $80 negative instead of this 100, right? But we saw another trade on the GBPJPY, and we put that trade. It doesn't matter if it's a buy or a sell, right? Now our trade is, now our free margin is not 8,596, it's 7,000 less, you know, 7,000, let's just say 1,000. It's going to be more than 1,000, but 7,596, right? So you can see how that would diminish really quickly if we have a whole bunch of trades. And what if I put in a larger lot size in the GBPJPY, or a larger lot size for my second buy, right? Any of those things are going to affect your free margin. And so knowing what those numbers are and what they mean and how they're calculated is important so that you stay far, far away from getting into any kind of trouble, because now you're down to 7,000. Now you have, 3 trades that could potentially go against you, right? Or you're using too big of a lot size. You shouldn't be using that large of a lot size. You would think, well, I've got plenty of room, right? I've got, $10,000. And so if I put in a 10 lot, which is $100 per pip, right? Then I would have to go, $100 per pip. I'd have to go 100 pips negative, right? So 10 pips negative would be 1,000. 100 pips would be 10,000. And I'm not going to go anywhere near, 100 pips negative. I have a stop loss somewhere sooner than that, right? So I've got a buy-in with 10 lots, right? So 10 lots is going to cost me, in just a Euro USD, $6,500 in free margin. Okay? This is why you can't just decide what lot size to use. There's a math and science to it, and we'll talk about that later as well. 6,500, which leaves me what? 3,500 left in margin, right? Now, if I'm using $100 per pip and I go 10 pips, that's 1,000, right? So if I go 35 pips negative, which can happen in a blink of an eye, right? 35 pips negative, then I get margin called. And I would get taken out of that trade because that would lose $3,500, which is all I had. So I'm thinking I have 100 pips to go, and I would be okay. But really, I only have 35 pips before I get margin called. But if I didn't know that, then I was just ignorant to it, and I learned the hard way. Okay, so I don't want you guys to have to learn the hard way. And we'll talk more about free margin, things like that, at a later time, because I really want to hit that home, but I wanted to cover that with you guys right now because it's an important number to understand. And part of that is you're going to tell yourself, if you were thinking about getting into the live market, or you're thinking about trading and you really don't know what you're doing yet, you don't know how to back test, you don't know any of that stuff, telling you something like that could deter you, because you would say to yourself, wow, that's a big deal, and I don't know anything about that. I should probably stay away from the market until I learn about that, right? So that's at least my hope in that regard. Now, and we will talk about it in a later segment. Now, really quickly, this trade tab at the bottom will show all this stuff, right, where your open trades are, all that good stuff. Now, if you want to see your historical trades, where your trades go after they close, then you go to history, and it'll show where any closed trades, any trades won, lost, you closed, whatever it might be, whatever deposits you would have made, they would all show up here in history, right? And sometimes it'll show just a few. You can right-click and go to all history, and it'll show all the history, right? And not just, the last month or the last 2 weeks. You can also just select last 3 months or last month or custom period, and that's what will show up here. But those are probably the two most important tabs, history and trade. Now, there are other ways to set a stop loss and take profit, and you can watch that video that we were talking, that's right here, and you'll see that later on, essentially all we do is just drag the line and set a stop loss and take profit. But that can sometimes become an issue if you start getting, if you can't see the number to the left because it's too small or it's blocked by a candlestick or something else. So that's another way of being able to set a stop loss and take profit, where you would just kind of drag the line. And let me see, I think I do it right here. Let's see. So let's see. Where do I drag that line? Okay, so just click on it and see where it says drag to modify, click and hold, and move it up, and you can see on the left right there that it'll show how many pips. And just remember, 74, that says 749. I don't know if you can read that right there, but that's not 749 pips, that's 74.9 pips, so just remember that. And you can see over here, it says TP, that means that you're setting your take profit. If we drug that line down, then it would say S/SL because this is a buy. And so that you could drag until that number says, if we set it for 20, then we drag until it says 220, 200, and that would be 20 pips, right, or whatever we would set it for. Another way to do it is we have a quick entry script that you can pre-program, and you'll say, okay, for this setup, I'm going to do a 20 pip, a 10 pip stop loss and a 13 pip take profit, like we were looking at before. So you can program that in there, and then use 2% of my account. So it'll figure out how much your account is and what 2% of that is, and then apply that to the lot size, and then with a push of a button, it'll just put in a stop loss and take profit and the correct lot size. So it'll put you into the trade, put a stop loss and take profit with the correct lot size, all with just a push of a button. So that's another thing you can do, which obviously, most people don't have access to right up front, and it is always wise to learn how to do it the long way and multiple ways for whatever may occur. Right? You don't ever want to be in a situation where you can't set your parameters and you've got an open trade or whatever. So knowing a number of ways to do it is best. But you can always just click and drag those lines to your correct stop loss and take profit. And you'll find that sometimes if that number right there to the left that we're looking at is infringed upon by something being in the way, like that sell and buy button or the candlesticks themselves, because we have them colored green and red, or whatever it may be, it's out of range, and you don't want to have to short and tighten up, like that, right? You can't really read that very legibly. Then you have other ways to set those stop losses and take profits. So those are a couple of videos for you. Is this video you can watch? Again, it's called MT4 Tutorial. It is on our on the Proving Ground site in YouTube. And then also you can rewatch this one if you want to learn how to download the program and what have you. Also, keep in mind that when you trade mobile, the mobile application it works differently than it does on PC. So you'll definitely want to become familiar with how to navigate that and how to place trades on that before you use it in a live scenario. All right, guys, that's all I have for you today. Next time we talk, we're going to go over back testing. I'm going to show you some simple back testing. We're going to go in depth. We're going to actually back test some things. I'll get you started with back testing something really simple and get you guys started on the parameters in which you should use when back testing. So this is more of a simple back testing. It's not using what we call the golden ratio analysis. And I'll tell you what, I'm not always apt to just give that information out. Matter of fact, I've never given it out live except to our existing members. And it's not something that's going to happen very quickly because I'm just starting this YouTube channel. Matter of fact, the only people that I have really subscribed to this are just a few of my members that have been with me for quite some time. So 1,000 subscribers, and I will go through an in-depth golden ratio analysis, show you guys exactly what things to collect, and that right there holds true. We've done it a number of, I can't even count how many times we've done golden ratio analysis for people to give them their stop loss, take profit, win percentage, risk percentage, and it is accurate. It's within a 3% margin of error. That means that if it says 70%, you can fluctuate 3% below 70 to up to 3% above 70 very consistently. And when we use our ratios, that accounts for that margin of error so that you're always making profit using those parameters based on the specific currency pair you're trading, the specific time you're trading, the specific setup you're trading, all those things. And so I will do a session on that after we hit 1,000 subscribers. So we're a ways away from that. In the meantime, I will teach you guys how to do simple back testing. Holy cow, I was looking at videos on back testing. Oh my gosh, it's garbage. No one's doing it right. I'm not even kidding. Every once in a while, we'll go back in and we'll look and we'll see. And I'll show you how to do simple back testing, and that is absolutely going to destroy what everyone else is saying about back testing. Look up some videos on back testing on YouTube and just know that what you're going to learn is not that. That's garbage. It's useless. It does nothing. It tells you nothing. It's simply just to practice your setup and see if it works for, 100 trades, a year's worth of trades, which means nothing if you look at the fact that if you look at just 2019 to 2020, for example, completely different market conditions. So if you had done that, going into 2020, your setup would have just been bust. I guarantee it. It wouldn't have worked anymore because the market conditions completely changed. So you've got to account for every market condition. But try me on that. Go here and just do the back testing, day trading back testing, or just do back testing Forex. Look at any of those videos. I've looked at all of these, matter of fact. Look at any of these videos. They're all wrong. Wrong. And any of these people right here, any of these people that do these videos, if you know them or they watch this video and they want to challenge me on that, absolutely, I will show them 5 ways from Sunday why they're wrong. Absolutely. Hands down, bar none. All right, guys, so next time we will talk about backtesting, and you will have a system of backtesting that will work for you, but it's not going to be as effective as the golden ratio analysis in that you may have to do it over and over and over again, so it may take a lot longer to do it the simple way, even though it's called simple. It's called simple because the process is much simpler than the golden ratio analysis. But you'll be able to, so that means you'll be able to get through your backtesting, your first string of backtesting quicker. But if at the end of it you don't get a yes, your testing parameters, you don't get the answer that is necessary, then you got to go back and retest different parameters until you get the correct parameter. But it'll at least get you used to the process. And then also, if you do get a yes, if you do get a parameter that says yes, that's going to work with this win percentage at this time, so on and so forth, then great, you're ready to trade that. Literally, you're ready to trade that setup because you know what the setup looks like, when to take the trade, and you know how to trade it. Stop loss, take profit, win percentage, risk percentage. You're ready to trade. You could be ready to trade in the market with a proven setup that soon as you've back tested it that quickly, knowing what you know right now, right, and just knowing a setup and knowing when to take it and how to take it, you're ready to go. You could literally put live money in the market and trade with it. That's it right there. Just that setup, you would be ready to go, and then you can rinse and repeat, right? Go and test another setup, so on and so forth. And we'll do a setup that anybody can access, right? Anyone. We'll do a setup that you can go and look up parameters on YouTube and find out about, and we'll backtest that. And I'll show you guys how to backtest that with a simple backtesting strategy so that you guys can get your butts in the market and start making some real money. All right, guys, that's all I've got for you. I appreciate you guys joining me. If you guys have any questions, of course, feel free to reach out. Thank you for joining us. Make sure to subscribe to our YouTube channel so you can follow us and get notified when we have any kind of events, whether they're live or pre-recorded. And I will be putting up more videos for you guys there as well. We've got some where we've just taken a whole bunch of trades on a 5-minute chart, just one after the other, and so you can kind of follow that sequence with us and a number of other things. So look forward for that. Otherwise, we'll talk to you guys next Friday at 5 o'clock Eastern for the sweep. Have a good one. Thanks.